Hi everyone, welcome back to my YouTube channel on long-term investment. It is about managing your money and securing your future. We have started our journey into technical analysis, which is a good to know knowledge. And today we will see what is the trend and candlestick charts. Trend refers to the general direction in which the price of the stock or the market as a whole is moving. And trend is defined in three different categories. One is the uptrend, second is the downtrend, and third is the sideways trend. An uptrend on a chart of any time frame is nothing but the series of higher highs and higher lows. So here you can see the figure on the left side, figure 4.3 is a rising trend line. So this is an uptrend line drawn on the rising lows. You can see the line is connecting three different points, higher lows, those are called. So this is the uptrend line. So usually uptrend lines connects the higher lows. Then a downtrend on chart of any time frame is nothing but the series of lower highs and lower lows. So here you can see the second chart of Amazon, the point 1, 2, 3, 4. Those are the higher lower highs point which downtrend line is connecting. So uptrend line usually shows the support where security has taken the support and then it has blasted off, where the downtrend line shows the point where security has faced the resistance and continued its journey on the downtrend. Now what is the trend line? The line which I have seen now. Trend lines are the lines drawn on the chart to connect series of prices together. The resulting line gives the trader good idea of direction in which investment's value might move. So this is very important. The trend line gives the idea about the future movement of the securities. An uptrend line is the line that connects two or more lows in a chart in an uptrend. The line is drawn in such a way that all the price action lies above the trend line. The more points that meet up this line, the stronger this line is. Then the downtrend. A downtrend line is that connects two or more highs in the downtrend. Once again, the more number of points that connect, the stronger the line is. Line is drawn in such a way that all of the price action lies below the trend line. A break in an uptrend line signals the possible change in the trend. So too with the break in the downtrend line. Trend lines have two major uses. They allow identification of support and resistance levels. Yes, this is important. The uptrend line shows you where the prices are taking the support, and downtrend line shows you where the prices are facing the resistance level. So these supports and resistance levels can be used while the market is trending to initiate a new position. As a rule, the longer the trend line has been in effect and more times it has been tested, the more significant it becomes. The violation of the trend line is often the best warning of a change in the trade. It is often said that trend is your friend. The most often repeated line, the trend is your friend, means we never cross the trend. The trend is up, therefore we buy the declines. When the trend is down, traders short the rallies. Usually trend line, the support of this trend line is taken by the traders for the short term trading. And we are going to use this trend line for our long term also. I will explain it later. So if you can short for whatever reason, then the downtrend is a reason to stay out of it till we get the change in trend to upside. So trader take the position on both sides, short side as well as the long side. As an investor, we will be always long in the securities. And it is very important to be able to detect the change in trend lines in the first place. So that is the importance of trend line. Now, why in the first place these trend lines are occurs, and what is the reason behind these trend lines? Why securities don't move in the one direction all the time? See, the stock market never moves in one direction. It always moves in the high and lows. Like you will never see security price going like this, or they are coming down like this. The security price never moves in one direction, or they never go down on the other direction all the time. Security prices always move in a very specific manner. Let's say the price of the security is 100. This is the price chart and this is the time chart. This is the timeline and this is the price. So if security start moving from 100 to, let's say, 107, and then it starts drifting down. At some point here it will take the support, and then price will blast off again, and it will make another high, and then it will start drifting down like this, and then it will go up another high. So it's like, let's say the price has started from 100, it has gone to 107, and then it has got to come to 105. Then 105 it started rising and gone on to 112. Then 112 onwards it has come to 110, and then it has gone to 115. So this is how the security prices will move. The reason behind is that, let's say there are people who have entered at the price, who bought these securities at the price of 100. So when it goes to 107, so they see the 7% profit, and those people will start selling those securities here. So this is the first point where it will face the resistance here. And when the price starts coming down, there are other people who were watching on the sideline, those who have now not entered from 100 to 107. And when price comes at 105, they will start buying it here. So there was one set of buyer which pushed the price from 100 to 7. Then there were the sellers who booked the profit from 107 to 105, and there is another set of buyers who started entering security at the 105. So they pushed the price till 102. So this becomes first resistance, or this becomes first resistance, this becomes first support. Then this becomes second resistance for the security, and then those people who bought at 105, they will start selling at 102. Then it will start going down, and maybe it will find its support too at here. So there will be another set of people who were watching the security from 100 to 112, and they think that this is the right point to enter. So they will enter at 110, and then they will push the prices to 115 level. What we see here is that series of highs and lows, highs and lows, highs and lows. So this is called higher high, higher high, and higher high. This is called higher low, and higher low. So once securities start moving like this, higher high, higher low, higher high, higher low, higher higher, higher low, and when we connect these points on the charts, this becomes our uptrend line. This is how to draw the uptrend line on the securities. So the trend, I hope you understood what is the trend and how to draw the trend lines. It is very simple, nothing technical about it, and this trend line will help us to identify our entry points. So now we are going to the candlestick charts. Today we will be stopping at candlestick charts and what is the candlestick, and then next we will be going for the different patterns in the next videos. Japanese candlesticks, the history and basic information, I have covered it here. The very concept of candlestick charts used in the forex trading comes from the Japanese rice farmers in the 18th century. So later on, American and European traders started using the candlestick charts. Earlier it was used by the Japanese farmers. The candlestick charts had been used for centuries before the West developed the bar and point and finger charts we know as of today. In the 1700s, Japanese man named Homan noted that in addition to link between price and supply and demand of rice, the markets were strongly influenced by the emotion of traders. So this is very important. Why the trade happens, or why the trend line happens, why the trade goes up and down. It is the emotions of the traders or trading psychology. Candlestick chart is used to visually represent that emotion as well as the size of the price movements with different color. Traders use candlestick to make trading decisions based on the patterns that help forecast the short-term direction. So before we end our session today on the technical analysis, I will take you through the chart of different Indian securities, which I have been maintaining since 2007 onwards, and we have this Nifty charts of L&T, Reliance, Bank Nifty, all the securities. So we'll see this Bharti Airtel. You can see it has been an uptrend from 2019. There was slight downward movement due to the COVID, and again almost at the October 20 it started rising and it has resumed its journey of uptrend. Here in this chart you can see for that brief COVID period it has gone into the slightly downtrend, but it has tested those support lines twice, and then it's resumed its journey from October 2020 till January 2021. Weekly charts was on the up move, and somewhere around January 2021 till June 2021, for 6 months it was in the sideways move. So here we can see it has tested the resistance lines of 630 twice, and when the price has blasted off in somewhere in September 2021, again it started its up move. It has gone up to 729, and again it has gone into sideways move for almost September 2021 till 2022. That means for 1 year, this security was in the side move. It was fluctuating between 798 1 to 625. So earlier support line which was there, so this was the earlier resistance which it was facing until the August and September 21. When it has broken this resistance, that resistance became the support line for almost 1 year, and then again it started its journey of uptrend from somewhere in 2022 or somewhere in September October. It has broken the second resistance which was here. This was the second resistance, 781. So it has broken this 781, and then it's resumed its journey of uptrend. If we have to draw the trend line, we can draw several trend lines here. That this was the one trend line, and then you can see this trend line is still continuing. There is no break in this trend line. So as of now, from 2020 onwards till 2026, the weekly chart of the Bharti Airtel is still in the uptrend, and you can see from the lows of 365 of COVID, and when it started its journey from 432 in somewhere in October 20, it has gone to 2031 in January 2026. In 5 years, October 20 till December 25, in 5 years, Bharti Airtel has multiplied your money by 5 times, more than 5 times. So that is the power of compounding. That is what we are going to do in our long term investment. In our next video, we will cover type of candlesticks, the various types of candlesticks, which will identify you the patterns and the trends, change in reversal patterns or change in trends. So be tuned to my channel. Thank you for watching the video. Please like it, subscribe it, and forward it to your friend. Thank you very much. Thank you.